Good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for the new year, January 2nd, 2024. We'll start with the hybrid swing portfolio in the usual way. And this is Alcoa. We're on 30-minute charts. We start the new year with a short and a K2 to the downside. This is almost a collapsing dragon. Standard risk. Orderly exit in the last hour and capture +1. This shows a lot of potential for tomorrow because we have this large gap to contend with from last week. So we had a nice run up, and then the rollover has occurred, and now this makes it very vulnerable. So if we get a breakdown below today's low, that'll be a signal to short, and then our target would be over here in this range at around 31.50. And if you take a look at the standard risk, that would give us something like a 3-to-1 downside move if that shows weakness tomorrow. So we'll be ready. AI was an interesting one today. Oops, let me get this. We had an early morning gain, which then reversed, and so we captured about 1R after it rejected the Bollinger Band mean. And then it came back through the dragon, so we tried it this way and picked up 1R that way. So this was a bi-directional trade, and that worked nicely. This was at one point almost +2R in our favor, but that reversal caused the RL10 to reverse and to escape. So we netted 2R and no overnight risk on AI. That one is certainly in play tomorrow. There was active strength on both sides of that trade, so that says it's one of the attention getters early. Amazon, when that gapped down to here and then broke through the RL10 belly, so that got a short and then a huge sell-off, and then ended up giving back quite a bit off the low, but we preserved about 1.5R, and then it ran all the way up and then all the way back and then closed at the midpoint of the day. So this is one that is ready to go, like from a zero state, ready to go in either direction. That's going to be an early tell on what the market's going to look like tomorrow. I like that one with no overnight risk. Caterpillar, a routine caught a 2 short. So this is how I play those. This whole thing has rolled over twice. Now you get these key checkpoints, 1, 2, 3. So when that opens today and then starts failing and comes through the dragon, that's my short with the stop here. And then the confirmation of that move when it breaks below the belly of the RL10 gives you that follow through. And so we're able to capture 2R on that one. I really like that 1, 2, 3. And then this is a pocket entry or a COTA 2 entry. COTA 2 entry to the 0%. Intraday opportunity harvesting. Cliff is one that I'm willing to hold overnight. This one was, again, a case where the previous move was down and then sideways and then collapse at the end of the year. And then today it finished up with a gap down below the RL10 and started selling off some more. So this sets up a collapsing dragon short. And then that thing never showed any signs of recovery and closed down here. So that gives us a solid 2R and a sign for continued weakness. What I'm looking for is an immediate failure below 1970 for that to keep going down. If it does, I'll put a second position on below the low of today. Otherwise, I'm gonna just harvest that one, but I'm feeling like this one has a chance for a gap to the downside, especially when you see that. I'm gonna jump ahead to US Steel. US Steel kind of did the same thing today, was real this should be, I'm sorry, that should be a red dot. That was not a long. I should have noticed that. Sorry. Yeah, so US Steel did the same thing and even more pronounced. Um, that gave a gap down, sell off, collapsing dragon, and then was horrible all day. And that gave us basically 3R to the downside. So that whole metals and mining is rejecting the strength that was here, and it's at a crucial support level. I'm looking for one more day of gap down, and then that's either going to sell off hard or it could be a morning hook and recovery. So that's the scenario that I'm playing for tomorrow. We've got a market's cushion of 3R in US Steel and 2R in Alcoa. I'm sorry, Cliff, to protect us against that play. So in Cliff, I'm playing that as the again holding that position overnight. CVS, on the other hand, was a gap above the resistance. So all of this resistance now becomes support as the gap up and go, and then that peaked right here. And so I take the when this RL10 rolls over, then I adopt the adopt the dragon as the exit. So I take that exit, and it's 1, 2, about 3R, and no overnight risk, but with the possibility of resumption or failure tomorrow. That becomes a compound critical state, and I'm ready to play that trade in either direction. Disney, 1R in the usual way on a COTA 2. So I treat that as a COTA 2 because we have a low and then a higher low in the RL10, breaks above the Bollinger Band mean, which is now sloping up, and it broke through the PSAR dot. So that is a nice low risk entry to the long side. When that gets to the peak and starts rolling over, and you have the RL10 roll over right here, I just take the exit at the skin of the dragon and cash 1R in the usual way. A 2-bar low would have gotten you out somewhere around in here. A 1-bar low would have gotten you out there, but I'm content with giving it some room to work. And now this sets up a resumption trade tomorrow or a failure trade tomorrow. So that one is Disney is definitely definitely in play. This is the last day to look at Dish. Dish got delisted today, so that's the end of Dish, and we enjoyed the run, but now it's done. Delisted company, no longer tradable. Devon Energy, COTA 2, gap up and go, cashing 1.5R, exiting at the dragon skin usual way. Electronic Arts, tried the long micro loss. Emerging markets, gap down and fail, probably stayed 1 bar too long. So we got basically a scratch. Ethereum was one of the few sources of strength right from the get-go today. I like the move, but I didn't want to hold it overnight, so we'll cash 1R and have no overnight risk. Mexico. This was a collapsing dragon short and 1.5R. It had a nice rebound in the last hour, so that could be in play as a reversal tomorrow. We'll see. Brazil. 1, 2, 3R in the usual way, exit at the dragon skin. Intel. Collapsing dragon. And cashed 3R, no overnight risk. IP, SSC, gap and go, well above the Bollinger Band mean, 1R. And that one is in play when you take a look at the magnitude of the moves. When you have a great big gap and a huge run up, a huge sell off, a huge recovery, a huge sell off, that thing is well in play. That's a 1.5% move on each one of those legs. So when you compare that to the size of the risk, that's a tradable entity, and that one is in play. We'll see if this shakes out any of the weak hands and see what kind of residual direction it has tomorrow, but that one will be interesting. Real estate, on the other hand, was a quiet move, gave us a fractional gain. It didn't fail like the rest of the market, so that's actually a positive sign. Coca-Cola was a good news story, gap up and go, and it left all the weakness behind. So it actually closed near that 10-day high, and this one could definitely show some more strength tomorrow, so I was willing to hold that overnight. We got a 2-hour cushion. Regional banks, 1 hour in the usual way on an SSC. Mattel, the Dragon entry short actually gave me more than I thought. It came all the way back to the belly of the RL10. This one now sets up a compound critical state trade for tomorrow, because it's at a support level where each time it's been there, there's been strong upward moves. So I feel good at cashing 2R on that one and waiting to see what is it going to do at that support level. Does it collapse or does it recover? So we'll be ready for that as a high priority trade in either direction tomorrow. Mattel is in play. McDonald's, this was if I remember, this is a grinding upward trade. Let's see what we got here. Yeah, so we had entered McDonald's last year, and today the grind kind of came to an end as it started to fail. We took the exit. It continued to grind upwards, so it's still on our radar, but we cashed an R as protective measure. Merck, I just missed the gap and go on that one. Microsoft, collapsing dragon for 2R. That one's definitely in play. I thought I had Merck. I thought so. Yeah, there was a gap and go. We did get it, and that was 1, 2, 3R to the upside in the usual way. It just didn't draw. Marijuana. No trade. Nvidia. This one I thought, yeah, this was a collapse, and then cashed 1.5. This was a money management exit. It was almost 3R in our favor, and then as it started recovering, when it got back to the VWAP, which is this orange line, gets back to the VWAP, I exited. I'm going to draw that a little bit stronger because I don't think that's showing as clearly as it should. Yeah. So when this thing recovered, I decided to take the exit at the VWAP rather than letting it come all the way back to the dragon. I wanted to preserve 1.5 for PBW, the clean energy. This is one that gave me a collapsing dragon when the VWAP also started to roll over and the dragon was down and the PSAR is down and the Bollinger Band mean is down and the RL30 is deeply down. It just, okay, it sucks. And then when it got into the winter, I decided to keep that short. We're holding 2R overnight as a cushion. Rivian, got short. I took the VWAP exit. I did not re-enter, although I think there's more short side available there because they missed their earnings. It was a disappointing earnings season. S&P, definite weakness all day. It closed. It was looking to close poorly, but there was a last minute burst of buying, which only brought it back to the middle of the price range. Maybe buying inventory for tomorrow's surge. So I think there's going to be fireworks at the opening tomorrow. Treasury stabilized around the VWAP. Tesla was a no trade, but was poor performer. Walmart was a gap and go, an emerging dragon that paid 2R, and I just took the standard exit at the edge of the dragon in the usual way. Not sure that that one is. Yeah, I'd like to make that a little darker. Make it a little easier to see the dragon. And then US Steel. As we've seen, that was one where big gap down, immediate sell off, piling on, holding almost 3R on a cushion for overnight. There, I'm sure. Little golden badger there. Good job, fella. Armor plated badger. This is the reading schedule, for the book club is going to start next Wednesday night. We're going to read the foundations book over a course of 12 sessions. And this will be I'll be do a quick summary and then any questions that come out of these sections. It'll be in this room. It'll be from 7 to 8 p.m. on Wednesdays. So just show up and be ready to ask questions. I'm not going to talk about any of the other sections of the book except for each section that we're reading in detail. And then that'll go all the way through the end of March. We will record those sessions too and later on that'll be a for sale home study course. So this is a chance to get on board in the pilot version of this at no charge, and to get your personal questions answered. So it's a pretty good deal, I gotta say. I'm about 110 pages into recording the audio book for that, which is just a painful experience. Listening to the sound of my own voice is just excruciating. Because you got to listen to yourself reading, then you got to listen to the audio to see what you need to edit, then you need to fix it, then you need to listen to it again. So it's just a horrible experience. I do not recommend it. So you've been warned. So let's go to, here's our first sniper trade of the day. This is in Devon Energy. And this is one where you get a big gap. There's your OR3. I like to see this where I can see a turning point in the RL10 on both sides, and that gives me something like a channel. And when it breaks north of that, that feels like a COTA 2 because you have this low and that low. So there's my COTA 2 entry, and I anchor it to the PSAR, and that's a 20-cent risk for execution, and it moves nicely. When this rolls over, that feels like an orderly exit, and you get about a 3R win in here. Now you get the COTA 2 happens, And this is the most relaxed way that I know to trade because you have this very clear VWAP that's right here cruising along, and you get the higher low above the VWAP, and then it breaks through the PSAR flip at the same time that it breaks above the Bollinger Band mean. That's a natural entry. And then when it breaks above the RL10 here, which also happens to be the price where spring turns to summer, this is a confirmation that you're doing okay. So now you can just enjoy the relaxed exit. And when that comes through the dragon and the PSAR, just take the normal exit for 2R. And that gives you a relaxed 5R trade in Devon Energy. And again, you don't always have to be the OR3 on these cycling symbols. You can wait 30 minutes and 10 bars to see what's going on. First day back, in the market. Don't be in a hurry. Trading time for information. Here's one where there's no gap, and you got CVS making a clear breakout from an absolute quiet channel. So I see that OR3, and it's much larger than the MMRB. So just increment in. It breaks out, and now by this point, I can get a no lose plus dinner for 2. And now I can see this. That feels like confirmation it's going up. The pullback doesn't even get through the dragon. The R10 only goes sideways and then resumes. This would have been a natural place for a second position. If you were doing a 2R battle drill, you probably would have entered here. But I'm content just on the first day back to trade one position and just get my legs under me. And that turns out to be about a 4R. That feels pretty good. So Walmart, yeah, and this is Walmart. So um, Walmart has a huge sell-off, big gap down, clears out the deck, and then that opening 3 minutes blasts all the way to here. The next bar continues the move up, and it takes out the size of this gap and then reversal gives an alert. And then that's just like a morning hook. Easy entry, standard risk box, and that's about 25 cents. And it never looks back. And when the PSAR flips, just take the exit. 1, 2, 3, 4. So that exit is at 159. The entry was at 158 or 157 and some change. So that gives you 4R with a little bit of spillage. And then the VWAP holds. So that VWAP is right here. Here's where the Bollinger Band mean crosses the VWAP. That's a good sign. The R10 belly gives you a Kata 2 higher low. So that's a perfect Kata 2 reentry, and that gives you another R on the way up. So that gives, so there's a 5R. And with just trading in that kind of relaxed way on 3 targets, that's over a dozen R. Let's go see what we got from the traders. All right, so this is Shopify from my brother. And back in early November, he's getting his entry around 62. And the PSAR is his friend all the way to 74. So that's plus $13 on about that's an 80-cent risk. So call it $1 risk plus 13. Nothing wrong with that. That's just on just on a daily breakout. And this one is Enphase Energy. And he's got a SSC entry here. There could have been a 2R battle drill second entry here about 25 days ago. He gets the peak, and now it's coming down to this location. I think he's taken the exit right here. Confirm or deny?
This is a decision point.
Yeah.
Yeah, it's I could take it if the PSAR flips. I'm going to take it. This is that one that it's all going to determine what S&P does tomorrow, because this tends to follow the S&P. So if it goes up, I'm doubling down, because this is the one that goes nuts.
Yeah, so you got 40, I mean, you got $46 of upside in this, and it's the my risk on this one was $2.40.
Yeah.
And you got 46, so that works out to about a 20R trade in 42 days, 32 days. So this one either, if it works, and I would say if it breaks above the 150-day high, which is here, that's just an automatic. And otherwise, you're happy to give it one more day of wiggle room. So that's what a 20R trade, 20R swing trade looks like.
Yeah, Enphase can go to, the first stop is 190.
Yeah.
Then this is the one that could go all the way to, we're just about ready to, if it breaks that, it's clear sailing to 190 to 200. So
yeah,
this is the one I talked about about 10 days ago. Thanks for your time. I would consider, if we're getting rid of Dish, this is one I would consider.
Yeah, that's not a bad one there. That's the 3-day.
Yeah, it's ready to go.
And it just entered summer, and you had a nice little pullback, and now it is stabilized. So what I like looking at that is this feels like that's leg one to here.
Yep.
And then it held and gives you that strong move, and now it's pausing right here. So that's leg two. So what I really want to see is it hold above 130, and then all it has to do is, with about a $5 risk, even let that go. And then your next resistance is not till here, 180, 185. And that's, that it's really an entire resistance region. It's a band. Even if you just say 170, that gives you $35 to the upside on a $5 risk. That's a 7-to-1.
Yep.
And is that a U.S. energy company that's going to benefit from government pork?
Yep. They so this also meets the criteria of one of my one of my anonymous traders. He will not trade something unless it makes money, and it has been making money for years. If you zoom this out back to the beginning of last year, 1 year ago, when this breaks out, it's the resistance that it's a natural level of resistance. So if it goes, it goes. If not, you can always get the reversion trade. Nothing not to like about this.
Yeah. Yeah, you've had three significant sell-off experiences, 1, 2, 3, and then this is a two legs up, and now this has cleared that whole resistance level. So the next resistance level is this.
Yep.
So this is like, you know, what we do is we like to measure with a micrometer, mark it with a crayon,
Yep.
and cut it with an axe. And that's what this. So any entry above about 133.
Yep.
Automatic long. Cut
This
with
is
an
that,
axe.
like I said, this is that one that I was really big on.
Yeah.
Before it made that second jump up.
Mhm.
And
Hey,
I would nominate this one for the list.
apology accepted. All right. Well, we'll use that to compare it to Devon. Yeah. All right. Let's see. Here's Joe on isn't that really? As you can see, I did actually have these all open, but for some reason it must have quick crashed. So let's try that again. Constantine just sent a note that he just did an interview on trading for prop firms and the challenges. And so I will get this link posted for those of you that are looking to trade other people's money. He'll relate his experience. We'll get that added to the research weekend. He's earned a couple million of other people's money to trade, and he's keeping a good percentage of that.
The guy is absolutely rock solid. I traded with him a little bit last year.
Yeah.
Just going over some finer point. The guy's a machine.
Yeah.
The guy's just a machine.
Yep. All right, here's Satya looking at coin. And there's the break, the short, the standard risk, and money management stop, 1R off the bottom, and keeps 6R. And that's not even optimized, fellas. I mean, if he does a standard entry here after this reverses, that gives you like the dragon skin entry. He gets this one. He gets the breakdown through the dragon this way, gets an SSC and a kata 2. He gets collapsing dragons all the way down. This could have been 30R, but we'll take 6. We'll take 6.
Don Cherry would say, beauty.
Keep your stick on the ice. This is, whose was this? This is Joe on Tesla. Perfect SSC. He's using a tighter wrist box. Cashes it on failure to follow through, 1.2. Here's his kata 2, right at the PSAR flip, standard risk. It rolls over, so when that peaks, he just takes it at the dragon skin, 1.6. That's 2.8 on a stock that was down for the day. And that's on 10-minute, I think. No, I'm sorry, that's 3 minutes. 3-minute charts. Oh, no, I'm sorry. All right, this is Sun. Quick cut, stops in reverse, second position. This one scratches, but that one pays for that one. This one should have been cut and then reversed here. This one was screaming. that when that gets violated, boy, do we want that one? Kevin doing some grinding on EWW. He's working to 1 minute. So this is quick, fast, and in a hurry, 2.2. And using the 1 minute just to refine his, this is like working the speed bag. And he's on the right side of every big move. He's getting the correct directionality. So that's good work right there. And missed that entry, which would have made that a even better day. Good training. This is one where, George, you don't always have to trade that opening 3 minute. That's what I wanted to show today, is that you get this move and it stabilizes right here. And you're on this side of the VWAP. And then you get this little, I love that entry, by the way. It does not come all the way back to here. So the fact that it fails to fail is actually information. And so this little big gap up, slide back, and then recovery, and then crosses the dragon again, that's a kata too. And so's that one. And then that one pays, both of these trades pay for that one easily. And then this one is a kata too. And this one is holding at the VWAP, and winter turned to spring. There was a lot of movement in that today. Same thing on Ethereum, but we can't go short Ethereum, but that's a kata 2 for you. This is a kata 2 all day. And I take a lot of comfort in kind of like negative confirmation, like when panic selling doesn't material like it's trying to. And now this, it doesn't break. It doesn't break. It doesn't break. It doesn't break. And now the PSAR flips. Maybe it could work. And then this is where it crosses the VWAP. And this is where it crosses the VWAP. Now we can't trade ETHE directly on the short side, but it can be traded in the currency markets. That's where Bill Scheit's crypto swing system really works well. This is really good work here. The re-entry. You in your trading journal, you should be skipped because so that you could start examining the quality of the decision. Now, if it was a delimitation, in other words, it was a choice not to trade, then how good is the choice? I mean, and there's a lot of really good reasons not to trade. All of them are good reasons not to trade. But we want to just know, was it based on a feeling or based on a policy choice or a constraint because of time or other commitments, family and business and so on? So I think you want to make sure that you are taking a look at that, at the reasons why you're skipping these trades. Like all of these kata 2s. Reasonable, and there was a reasonable reentry, but I actually like this one a lot for tomorrow. You notice that the Bollinger Bands have compressed. This resisted the sell-off today, did not happen. So I really do like McDonald's on the long side going forward, especially if we get some kind of market support. On this one, here's the observation I'm going to make. You have a 1, 2, 3, and then this thing blasts up and then comes back, and so you're able to scratch it. This one gives you a recovery move, and then it does not, it right away fails. It like doesn't even get up to test the previous high. It fails right at the Bollinger Band. So when that starts failing, I don't want to take a full 1.1R. In fact, I want to be short there. So maybe I can get out of that at the VWAP, and then either short at the VWAP or short right here. So we got to read that. So that was the close last year. Here's the open. So there's your gap down. It sold off this far and then came back to close right here. So we're right at the PSAR decision point. We're still well above the Bollinger Band mean, above the 10-day low. But now that's the question. If this fails, I will not let it go below 470. I will have a short side bias if it breaks through this red line, which I just colored blue. If it breaks through that red line at 470, I am big time looking that way. But this is a nice little pullback and recovery to here like that. That would give you like a COTA 2 off of this support and then this support. So I'm ready to play it north of 470. So I have a $4 risk box in here. That is my yellow zone for the intraday. Everything inside that yellow box tomorrow is noise. So if it breaks north of 470, I want to be long. And if it breaks below 470, this was 474, sorry, I want to be short. So this is the noise box, $4, which is less than 1%. It's about 0.8%. Bullish normal, long-term strong, temporary weakness, volatility showing risk off, but we're in a bullish strong move. You got buy on dips in tech. So let's watch names like Intel, Microsoft, especially Apple. These are the old reliables that really dominated last year. Lots of new breakouts to the upside. Only Disney auto frames well. ETFs, big upside in healthcare and consumer staples. A breakdown in agriculture. Micro bottoms here in energy. What I like about that energy company my brother showed is that today actually was a very micro loss on a day when the energy sector itself was pretty bad because you got oil and uranium here. So energy was weak. And then XLE was not particularly strong. Yeah. So I like that energy company you showed. Nike with a 10-to-1 auto framer. Surely we have to take a look at that And only because I want to get short them because they're such an evil company. Genuinely evil. Yeah, bigger than Stuttgart. That's probably one that could be on the list. So here what you have is this is what a 10-to-1 looks like. So here's our 10-day high up in here. Right? Big gap down, and then it closed right here. And today's range is small. So you have that tiny little auto framer wrist box. And then the 10-to-1 basically says there's 10.8 of those, 5, 6, 7, 8, 9, 10, 10.8 to scale. Heck, it's 4 or 5-to-1 just back to the reversion to the mean. And this is a place where it could find support. You wouldn't be surprised. And the last time it was here, it went there. But if this fails, then it at least is going to come back to here. And so that's going to give you 1, 2, 3, 4. I think that's one we're going to add. We're going to eliminate, see, dish. And I think we will add Nike. And his R10 is 25 cents. And the my risk is going to be about 75 cents. So Nike's in play. And I hope it sucks and goes to zero so we can be short. No squeeze is better than 2-to-1. This is why that is so very interesting. Nike is number 3 in the squeeze. So today was the absence of panic selling. So even though it's sold off so much, it's really a favorable compression. That is what max pain, which is a sell-off from the 10-day high, plus range compression gives you max pain range compression. Hard to argue with that. Let's see. Yeah, so that was the squeezes. This is here's your auto framer for the standard symbols in our deck. And still dominated by the fall now. There's only a handful of symbols in the summer. And what I like about, on the tech names, this is why Intel feels really good to me. Intel and Walmart, I like them both. And I like McDonald's and Coke. They're in the summer, but they are well below the Red River on MACD. So that means that thing had hard sell off, but it's recovered enough that it got above the zero line. So it's now in the summer, but the Red River is still far away, which is the normal. So there's a lot of move, but you also have the strength of summer. That could be a really good long growing season for McDonald's and Coca-Cola. The haves and the have-nots today. That'll show you where the in play symbols are. Merck at 989. Holy smokes. Yeah, that's what a 989 looks like in Merck. So how does it get 989? Well, because you go back 10, this is how the NDX works, and that's why it's so powerful. If I just go back to day -1 to today, I have to take that one out. The highest high previously was here, and it broke out much higher, 10 times the size of the 10-day look back. That's how big that move was in Merck. That's an amazing move in Merck. Look for more of that tomorrow. Wow. I should have done better on that swing. And that shows that strength in the entire sector. You got Procter and Gamble, Pfizer, Johnson and Johnson, and Merck. And those are all components of XLV. So, hey, which one's going to win? I don't know. Maybe you just trade XLV. Maybe it's time to be an XLV. Yep. That's nice. So I just start connecting all of these dots. And there's your price. That's nice. The price is nice. Go out to 3 days. That's your oscillating Chinese serpent dance. So I guess there's two ways you want to play this, right? You say, well, this thing could go as high as here before it gets to be outrageous. But if that fails, wouldn't you then expect it to be in this channel with that as the midpoint? And you would expect it to work its way back to the Bollinger Band mean and even the far side of the channel. Nice. These things frame themselves. We are testing the early years here. It's the RL, the early year move. The RL30 is down. The 90 has moved to the far side of normal. This would be a natural place for it to roll over. And all it takes for the 90 to show weakness is continue, selling for the rest of the week. So the R10 has come back to the Bollinger Band mean, which is where you would expect it to find support like it did here, which was that little bump. When it sold off and found support here, that's when you got this move. So if this has sold off and now finds support right here, you would expect to see that. So that's why we want to watch the oscillation of the RL10. Is there some tactical slack ready to go? There is. And then the 30 has gone from overheated back to something like the edge of normal. And that would be like a Kata 2 reentry. So this thing is well poised to take off. And all we've had is 1 day of selling. So tomorrow, so this is how that scenario could work out. You had a really nice end of year close at December 31st. Today there's a gap down, some micro selling. Tomorrow there's a gap down to shake out the weekends, and then you get a monster move of turnaround Wednesday on the second day of the week. So watch for a big gap and then bracket that. And then if it continues to fail, easy short. But if it works this way, then you have an SSC and room to get all the way back to the high of December 31st. That's what we'll be looking for. All right, that's everything for today. We'll get this published and processed, and I'm gonna go record some more of the audiobook. Take good care, and we'll see you tomorrow.